Well, DC fam, my name is Moes and I'm here with a brand new video. I'm gonna explain to you guys what a trade setup is. Lately, I'm getting a lot of questions about people who get into trades without knowing where to exit or they don't know where to enter. And if you miss one of those two, actually there are three elements, then your whole trading plan is failed. Today, I'm gonna explain to you guys what a trade setup is and what each of those elements means. First of all, a trade setup is based on three things, like I said: an entry, a stop loss, and the take profit. First of all, the entry. Before you can enter a trade, of course, you have to figure out where where your entry will be. And your entry you're gonna based on confluences. What does that mean? You're gonna build up tools in TradingView or in any other platform that you use for your trading. Then you're gonna have like horizontal resistance or support lines. You're gonna have maybe a Fibonacci. You're gonna have any kind of tool that you have in your arsenal that you can use and that you have tested also multiple times. Me personally, I like to use the Fibonacci Golden Pocket as an entry. Of course, I use multiple confluences that have to back up that Fibonacci Golden Pocket, but at the end of the day, it's a really good entry point for me, entry trigger. Then we have the stop loss. The stop loss is basically the red line in the sand where you're gonna say, hey, at this point, I'm gonna take my loss and I'm out of the trade because I'm expecting much lower or much more downside. That's based on if you are in a long position. If you get in a short position, you're gonna base your stop loss based on because you think they're gonna be much higher prices to come. That stop loss, you can only, and I mean it, only do it based on market structure. The stop loss you're never gonna do based on horizontal resistance or other confluences, but always on market structure. You put your stop loss below or above the last two highs, or mostly if you're a swing trader, you can put it above the last high. That's on a daily time frame. If you are a day trader, I'm never putting it below the 15-minute time frame. So even if I trade below the 15-minute time frame, I always base my stop loss based on the 15-minute time frame. And then you have the take profit. That's basically the point where you're gonna get out of the trade, take your profits and enjoy. Like I said, if you miss any of those three elements in your trade setup, you're not gonna have a trade. Those are the crucial three things you have to have based on any trade you're gonna take. Even if it's a swing trade, even if it's a meme coin, you always have to know, where am I gonna get in? Where am I telling myself, hey, this is enough loss and I'm getting out? And where am I going to take my profits? And to get back on the take profit part, you don't have to have only one take profit point. You can have multiple, maybe three. And that's also for the entry and the stop loss. You don't have to have only one entry. You can have an entry on this price and then a little lower and also a little lower. The average of your price is then your entry. When you have like multiple entries, you have to look out that you don't oversize your trade, because your position size is always based on your stop loss, not on your take profit or on your entry, always based on your stop loss. How much is the percentage of your loss? Based on that, you're gonna calculate in the formula that we have in the Discord, and based on that, you're gonna say, okay, this is going to be my position size. Usually with future trades, I never risk more than 2% of my portfolio size. With swing trades, I can risk a little bit more and then it's 5% of my portfolio size. Never ever do I put more than 5% in any trade. You have to know also, like I've mentioned this before, but I'm gonna tell you again, trading isn't a sprint, it's a marathon. You don't wanna get there really quick, you wanna get there the long way. The longer it takes, the better it is, because you learn more. And that brings me back to the last point that I want to explain to you guys, and that's about journaling. Every trade I take, I journal in my sheet. I write down what is my entry point, what is my stop loss point, what is my take profit point, and at the end of and also what are the confluences. Like most of the times when I have like a new tool that I'm testing, or a new strategy, or a new pattern that I'm testing in trading, I need to write those details down. So at the end of the week, I can look back at it and say, hey, this pattern works for me, or this doesn't work. That way I knew that the Fibonacci Golden Pocket works very well for me, because at the end of every week I can see that every entry that I take based on the Fibonacci Golden Pocket is a very good entry, and most of the times it's also a sniper entry. Well, that's it. I hope I have taught everybody a little bit more about how to take a trade and don't lose too much money. Never ever take a trade based on I see a green candle, I get in, I see a red candle, I get out. That's a gamble, that's not trading. Your trading plan always has to have those three things that I just mentioned: entry, stop loss, and your take profit. Have a good day, see you at the next video.